Hi, this is Jeff Brindley from RWS Financial Group, and I just want to welcome you to the presentation today. I want to talk a little bit about long-term care insurance and is it right for you? Sometimes it is, sometimes it's not. That's what we're going to talk about a little bit here today. But first I want to start out with a little bit of information about RWS Financial Group. We are a group of independent financial advisors. There's about 28 of us. And our broker-dealer is Cambridge Investment Research. So we've got incredible support from Cambridge Investment Research. And since we are independent, that's a good thing because we can select from thousands, in essence, of products that are out there. We don't rely on somebody up from corporate on high telling us what to sell. In other words, this is our product and you have to sell this, whether it's right or not for the client. We go out and find the right products. And as a fiduciary, I'm a fiduciary, I work in the best interest of my clients. So I think that's extremely important to understand. RWS was started in 1985. Again, there's about 28 advisors, and we have just an incredible support staff as well. And so you'll always get that good support. I wanted to talk a little bit also about my core values. I think it's important that you understand what you're getting with me, good, bad, or indifferent. But my core values are Christian values. They're Christian values of honesty, integrity, respect, kindness, and a sense of social responsibility as well. I don't try and convert you. I'm not going to convert you or anything else. This is just how I run my business personally. I strive to honor God in all that I do, and I think it's reflected in how I conduct my business and how I care for my clients, my vendors, and my support staff. So I think that's important for you to understand, whether you like that or you don't like that. It's just important to understand how I run my business. So with that, I'm going to get started. Oops. I'm going to get started now. So with our workshops, again, we've done close to 200 workshops last year, 2019. We did close to 200 workshops. And they were all free, open to the public. So we're out there educating the community. And so with all of our workshops, we strive to introduce, which we've already done, who we are, and educate. And we've been doing lots of educating over the last year or so, and then illustrating as well. So we try and illustrate the concepts as best we can whenever we're talking to our clients and talking to folks like you in presentations like this. So our commitment to provide sound financial information, help you identify goals. That's one of the key pieces is every person's goals are different. And if you're a couple, you need to work together to figure out the goals and work towards those. And then offer a complimentary consultation. So here at the end of the presentation, I'll offer a complimentary consultation for you as well. And that could be via Zoom, if we're still in a pandemic, or it can be in person, however you'd like to do that. And then we always like to mention, too, that you seek out tax advice and that type of thing. This is not intended to be tax and legal advice or even investment advice. It's a little bit of guidance for you, a little seminar for a little bit of guidance. So long-term care insurance coverage. Long-term care insurance doesn't cover the sick in the traditional sense. So if you break your arm, you go into the doctor and get it fixed and your health care covers that. If you come down with the flu and end up in the hospital, God forbid, your health insurance covers that. But long-term care insurance is insurance to cover those folks that are not able to perform, in essence, 2 of 6 ADLs. And what's an ADL? ADL is an activity of daily living. So if you hear an insurance guy saying something about ADLs, that's what they're talking about. Activities of daily living. So dressing, bathing, eating, toileting, continence, and transferring. Transferring is just transferring from the chair to the bedroom, from the bedroom, out to the living room, to a chair, those types of things. So approximately 70% of people over 65 will require some form of long-term care. That could be in your home, that could be in assisted living, it could be in a nursing home, but some form of long-term care. And this statistic really stunned me, that approximately 40% that are receiving long-term care today are between 18 and 64. I don't know the numbers exactly, but my guess is most of those are between 50 and 64. But, young people get injured. They have health issues as well. And, if you're a young person, you get into a car accident, you may end up with some sort of long-term care as well. So, unfortunately. So, tax deductions. Premiums paid on long-term care may be tax deductible. A lot of people don't know that. So those premiums that you're paying on a monthly basis, those may be tax deductible. And we always ask that you check with your tax person. It could be a CPA or tax preparer, if that would apply. And then generally corporations paying premiums for an employee are tax deductible. So if you're an employer, that's something to think about. Be able to get that tax deduction. If you're an employee, it might be something to ask your employer about as well. So what will Medicaid pay for? And will Medicaid pay for anything? A lot of people think that yes, it will. And the answer is yes, it will in certain circumstances. So Medicaid will provide long-term care services for the poor and those who spend down their assets. So if you've got $200,000 in assets, you need to spend those down first before Medicaid is going to pay for long-term care. So in most states, you must spend down to $2,000 in assets. And most people don't want to do that. But if you're okay with doing that, that could be an option. Medicaid does not cover long-term care in your home, which is important for most people. I think most people want to stay in their home if they can. And if they've got long-term care services in their home, then the long-term care insurance could cover that, whereas Medicaid does not. And long-term care in assisted living is generally not covered. Long-term care in a nursing home, Medicaid will likely cover. So that's the general scenario with Medicaid. Policy types. So there's really two different types of policies. There's the traditional, which the traditional isn't as common as it used to be, but if the premium, or if the long-term care insurance, is unused, then there's no premium returned. So in other words, let me explain this, that you pay a premium, and let's say you pay a premium for 10 years, or let's say 15 years, and you're 75 years old, and you have a heart attack, and you die. No premium is returned to the beneficiaries in that case. In other words, all the money that you've paid in didn't go to long-term care, it just went to the insurance company. Nowadays, they have what they call a return of premium rider. And with the return of premium rider, if the long-term care insurance goes unused, in other words, you're healthy, and then you have a heart attack and die, and you don't use long-term care insurance, then there is life insurance that goes back to your beneficiaries. And so with the old, the traditional, I call it old, but the traditional long-term care insurance, that was always a problem, that if the insurance isn't used, then what happens to all my premiums? Well, they go to the insurance company. Here, you get a death benefit paid out to your beneficiaries if you should pass along the way. So that's important to know. So tax qualified and unqualified policies. So the tax qualified policies are the most common written today. It used to be we had unqualified policies, but most of them are tax qualified. And they've got some qualifications. That's why I call them tax qualified. So they're expected to require care for 90 days. So 90 days or more is the term that the insurance expects that you're going to have to have care for. So at least 90 days. That you're unable to do 2 of the 6 ADLs. Again, the activities of daily living that we talked about earlier. You need substantial assistance due to severe cognitive impairment. So this is an either or. Either you're unable to do 2 of 6, or you need substantial assistance due to severe cognitive impairment. So like Alzheimer's. So either one of those would qualify you to start your long-term care in this instance. And then the benefits are non-taxable. So as long as the policy meets these criteria, then the benefits are non-taxable. And then there's the tax unqualified policy. Again, these are no longer common, but they're still out there, so you need to be careful. And it's based on medical necessity. So it's the patient's doctor or the doctor and someone from the insurance company that makes the decision whether it's medically necessary or not. So the more liberal policies would just have the patient's doctor would come to that conclusion of medical necessity. The more restrictive policies would have the doctor and someone from the insurance company determine whether it's medically necessary or not to go on long-term care. Usually it's an inability to perform one ADL, but again, they have to prove the medical necessity. Okay. And then the benefits may be taxable. So these types of policies aren't as common, and it's because we've run into issues here, the insurance company deciding what really makes sense or not, and they may not be taxable anymore, or they may be taxable as well. So those are the key issues, and that's why they're not as common anymore. So again, is long-term care insurance right for you? Maybe. Apparently 7 million individuals have some form of long-term care insurance, and so it's very prevalent. 350 policies sold each year, and I do sell these policies. Long-term care insurance companies paid out a record $11 billion in claims. So with people living longer and the medical profession enabling people to live longer, I think that long-term care is more prevalent than it used to be. That was 310,000 policyholders that were paid out that $11 billion in claims in 2019. So it's fairly prevalent. And I think that's it. So here's my information. I did promise you an opportunity to set up a free consultation. And if you check the bubble up there, up on the screen, you can click on that bubble, and it gives you, up in the upper right-hand corner, I believe, there's an orange or red box that says make an appointment. All you have to do is make an appointment, and we'll sit down, talk about your particular situation. It may make sense to you or for you, or it may not, but it's important to sit down and consult a little bit about that. Again, my contact information is here. You'll also find my contact information when you click on that bubble to make an appointment. And I thank you so much for joining me for this presentation. And I hope you stay safe and stay healthy. Take care. Bye-bye.